Greetings, this is Kevin Jefferson, cash flow creator, father of the Forex family, followmytrades.com. Here with Trade Theory on Bitcoin and Ethereum for today. Today is Thursday, November 10th at 11:34 a.m. Eastern Standard Time. And so I'm going to go ahead and share my screen and show you what I see as it relates to Bitcoin and Ethereum specifically. So what we have here is this is the Bitcoin chart. And obviously we have price that's fallen down here. And we spoke about the bottom falling out. Actually, the best time to get in on the short side was 2 days ago. But I'm going to talk about first the alternative scenario, because obviously it looks like the bottom wants to fall out of Bitcoin at this point. But this actually is, this could be a very dangerous decision to make, to just jump in based on what you see here. So, the practical minds will say, just go ahead and take the short, but we'll get back to that in a minute. So let's talk about the alternative scenario, which is seeing Bitcoin turn around and actually go higher. Okay, so I'm going to go out to the weekly chart first and kind of show you where we are. So now I want to say that the scenario for Bitcoin going lower is definitely there. I've given out a price point of 10,112.19, I think, thereabouts. So I'm looking for price to get down here. To be clear, that was, what I see from based on what we have going on here. But I want to talk about the alternative scenario because, just as you think things are going to go, they'll likely go the opposite direction in so many cases, Murphy's Law, if you will. So what would have to happen for price to actually consider or be considered in a reversal and going long or bullish? So for Bitcoin, price would actually have to close this line right here, 21,132.56. So if Bitcoin closes on a daily above 21,132.56, then that signals that it's actually going higher. And that would actually close above the weekly pullback point and would establish a level one long on the weekly as well. And so what that would mean is price, I would expect to go higher. But now let's flip it around and say, okay, I want to just go with what I see here. And so how would I take a short trade right now? How would I sell Bitcoin, and what would be my stop point? So if you sold Bitcoin now, which you're getting it on a pullback now, and I expect it to pull back a little bit more, it may pull back actually up to this level right around here, or maybe even higher. On the lower time frames, it's definitely showing that it has opportunities to get a little bit higher, maybe in the 19 area. But let's just say we're going to take it off of this short trade. So now price is pulling back, so it's not a bad place to get in. But maybe if you can stand it, maybe wait for it to get up to about 19,000 before you would short it. And then I would set the stop loss actually at where I expected to turn around. So 21,132.56, that would be my turnaround point based on what I see here. And the reason I would do that in this particular circumstance is because I see kind of a full market cycle, or the structure of a full market cycle here, which would give me permission to go ahead and set my stop at a place that I normally might not set it. So like I say, if you want to sell it, you can sell it here. It could go against you by about 2,000 per coin and pull back up to the 19,000 area before continuing short. But if you want to just adjust your risk appropriately so that you're getting the max reward for the risk that you're taking. So that's the short side. And then obviously for me, I have that downside target of the 10,000 range. Now let's flip it on its head. And if you take it long and it knocks you out on that trade, then you can just adjust the trade and take the buy on the other side of 21,132.56. And then I would set my stop actually back down to where price lowered. So let's presume that price didn't go any lower than where it has previously. So the previous closing price for yesterday was 15,690.78. So I would set my stop if price turned around and I wanted to take it long and buy it, I would set it down at the 15,690.78 point, knowing that that's the lowest that it's gone before demand ramp price back higher. So that's how you look at both scenarios, both sides of of a trade, and logically figure out how you can get in. And even if you choose to take action on one side and it doesn't work for you, that's how you turn it around and actually use it to your advantage on the other side. So let's look at Ethereum now. So this is the daily chart on Ethereum. They look very similar, but they're not. Now I see a very large pattern here, and I see the market structure that's established here, and so it would give an indication that price wants to continue lower as well. So on this one, if let's go with the alternative scenario here. Before I get to the common scenario, which is people expecting it to continue to go lower. So now the crazy thing and the interesting thing on Ethereum is, unlike Bitcoin, actually it's pulling back off of a level one long, which means the first push long of a reversal. So it's actually pulling back off of a level one long here, Ethereum. So it's actually bullish on the weekly chart. That's different than Bitcoin, but it may give some indications of price turning around that we don't see on the Bitcoin chart. So that's something to keep in mind. So that's why we're going to talk about the alternative scenario for Ethereum as well. So price would have to close for Ethereum at the 1,644 and 88 cents. So 1644.88 would be the price point on the daily that I would expect price to close at before I would actually make a move to take this trade long. And what would happen here on this chart on the weekly, this red candle right here, it may remain because maybe it closes out like this on the weekly. But if it turned around and went long, then this would actually be a long green candle, and price would be right back up into this area, which would indicate that it wants to continue higher. Now, I would say that, there is definitely room, and it looks like the price definitely wants to go lower. And I have a ultimate price of what, 686. 650, 632 after hitting 996.23 on the downside. So I'm not saying that that's the case, but that's what, if you were taking an opposite direction and want to take a trade long, you'd have to wait for it to close at 1644.88. And then you could, you would actually set your stop back, actually still back lower down here at the 996.23 range. So I wouldn't actually change anything on that. I would actually have a lower stop, 996.23, as opposed to where price pushed down here. So that's the upside. But now let's say if you want to go ahead and sell it because it's looking like people are selling. So right now, same thing as Bitcoin, price has some upside capacity. So it may get as high as, who knows, maybe up as high as 1490 or something like that. And so you can take this trade short and expect a little pullback. Price maybe moving up against your 100 or 200 bucks or so. And then I would set my stop on the high side at 1644.88, because that's where I'm looking at price to close for me to consider price to be going higher or being bullish. And then I would ride it on down to, my weekly targets, which I had mentioned previously on the downside. So now on the flip side, if you took it long, then you'd have to wait. You have to establish all the upside targets. And so I just want you to really get it in your head that the way that you're successful and the way that you kind of mitigate even taking a trade or taking a position and it working against you is knowing what the alternative scenario is actually even before you go into the position. And so that way, should you get knocked out of the trade, should you be wrong on the first try or the first iteration, you already have it in your mind from a logical standpoint. Before you put any money on the table, you've already established what your parameters of your trades are. Because what happens is a lot of times people will take a position and then they want to make logical decisions after they've got money on the table. And we all know that once money gets on the line, then your decision making changes a little bit because it's now more heavily impacted by emotion. And so what you want to do is actually plan out your scenarios before you ever take a position, so that if you're not correct in the first iteration, you can actually change that and move that in the opposite direction and not be so fearful, and actually move for the place of confidence. Confidence and speed of action is very important, or deliberate action, not speed of action, but being deliberate. So if you want to learn how to do this for yourself, called DIY trading, visit us at fmtrades.com. If you want to learn how to do this, but you don't have time for yourself to learn it on your own, then go to fmtrades.com anyway and click the DFY button. We're currently in open enrollment where we're allowing people to apply to become members of the Cash Flow Creation Club, where we build cash flow for you significantly, scaling it without adding employees, overhead, or what I call the BS associated with being in business. So find us at fmtrades.com, sign up, click, get on the phone for a conversation with me, and I'll talk to you soon. Until next time, enjoy the day and happy trading.